Okay, so I'm brand new, right? And I'm looking at the economy right now, and it's like I was gonna flip, I was gonna wholesale, I was gonna buy and hold, I was gonna Airbnb.
Yep.
I think over the next 4 years, I'm just not gonna do anything. I'm seeing a lot of those people going, man, I missed my window of opportunity.
Yep.
Do you believe that that is the case? Hey guys, welcome to the YouTube channel. Today I've got a special guest, Henry Washington, all the way from Arkansas. I didn't know that that was actually a state until today. I thought I thought it was a city inside of Florida, but surprise, surprise, it's actually a state. Henry Washington, welcome to the show.
Thank you, man. I appreciate you having me. Yeah, it's Arkansas for those of us who are.
Do you guys call it
No,
Arkansas or Arkansas?
We don't call it Arkansas at all, actually. We do get mistaken a lot for Arizona because people who don't know the state abbreviation just always assume it's AR.
AR. Oh, that makes a lot of sense. I never had to deal with that. You know what's great? A lot of people don't know this. The reason why you choose to live in Arizona or Arkansas is so when you're going through the little click menu.
Yeah, you don't have to scroll forever. You're right at the top.
That's benefit number one of living in one of these A-list states. So today, guys, we're going to be talking about what's going on in the market, what Henry is doing, what he thinks, what he believes is going to be happening in the market over the next, let's say, 12 months. Everybody that's brand new, they're always wondering, should I get into the market? It's kind of like playing hopscotch or like jump rope.
Double
like
Dutch, yeah.
Double Dutch. It's like, should I be jumping into the market or should I stay out of it? So let's talk about overall kind of what's happened this year first, and then we'll jump into what you think is going to happen over the next 12 months.
Let's do it.
What's happened in your business the last 12 months?
The last 12 months, we haven't shifted strategy. We've just tightened up on underwriting. So we are still actively looking for deals, like consistently marketing for deals, but we are trying to be conservative in our underwriting because things are changing so quickly.
Yeah.
And if, you asked, 4 or 5 months ago, I didn't think prices were going to come down that much, but prices have started to come down.
This is interesting. I was talking to Jamil about this 6-7 months ago, and he was on the market with you.
Yep.
And everybody's looking at the data and they go, no, buyers are so strong. The market's not going to dip. We're going to have a settling in. I'm like, I was sitting there going, I don't know, Jamil. I think like interest rates are going to continue to go up and there's no way the market's not going to be impacted. For us, we had 4 houses this year that we planned on flipping.
Right.
We ended up having to burr them and keep them because I was going to have to write a check. Literally, I went on 4 houses. I probably was going to make about 200 grand between those 4 houses.
Yep.
And I went all the way to maybe losing 100 grand combined. So it was a $300,000 swing on 4 houses that we ended up just refinancing, putting them into long-term debt. But the long-term debt I got was like 6.5. Right. I'm glad I caught it before it got nasty.
You got in earlier.
I got in early.
Yeah, absolutely. So I'm starting to see nationally prices are coming down.
Yeah.
And because I live in a market like Arkansas, typically we get to see what's coming before it gets to us, right? It starts to happen in the more expensive markets or maybe on the coast, and it starts to work its way in. And so we're not really seeing a decline in pricing in the first-time home buyer subsection of houses.
What's your guys' average purchase price in your area? 250 probably?
250 to 300 for the first-time home buyer house, right? And so in that range, we're still selling. If you got something on the market under 250, it's gone. Like I just listed a house 2 weeks ago. It was on the market for 2 weeks before we got an offer, but then I got 3 all at once. And then we accepted one at 10 grand over asking.
Oh, wow.
Right.
That's recent?
This was like we accepted the offer last week.
Wow. Amazing.
Yeah.
Okay.
Right. So things are still moving, right? And that's why, real estate is market specific, right? But history says that we're going to be impacted later. Maybe not as heavy as some of the other markets, but I'm just anticipating it.
Yeah, I mean, this is one of the benefits of like these smaller areas, right? Like Ohio, Iowa, they're inexpensive. And compared to Arizona, our average purchase price is $450.
Right.
Right. That's our average. And so for you to find anything under 300,000, like people go, wait, what? Why is that $300,000? So what happens is, like Henry's saying, guys, is that our markets get affected way faster because we're bigger, we're more expensive. People then actually, when economies slow down, people will actually migrate to less expensive areas, or they'll move back home, or they'll do whatever. And so your guys' market is a little bit insulated from some of these market issues.
Yeah, we're insulated from that perspective. And then there's some insulation from an economic perspective, being that a lot of the drivers of the jobs in the area are around companies who are pretty recession-proof companies. I would argue companies that do better during a recession, right? So companies like Walmart and Tyson Foods, JB Hunt, these are places like when times get tough, more people shop at Walmart.
Yeah,
right?
so that's a great point, right? So people feeling bougie, like they're getting pay raises, the government's spending money. People go, dude, I'm gonna go from from Walmart peanut butter to Target peanut butter, and then when the economy shifts, they go, dude, that extra 30 cents difference actually makes a big
Great value
difference.
peanut butter ain't so bad.
You're right. It actually is pretty good. It's pretty good. Okay, so I'm brand new, right? And I'm looking at the economy right now, and it's like, oh man, I missed my window. I can't get into real estate. I was gonna flip. I was gonna wholesale. I was gonna buy and hold. I was gonna Airbnb. I don't know, man. I think over the next 4 years, I'm just not gonna do anything, right? I'm seeing a lot of those people going, man, I missed my window of opportunity. Do you believe that that is the case? Because there's a saying. The saying is, never catch a falling knife.
Yeah.
Right. And our economy is kind of falling, and people trying to get in and catch that knife while it's falling down could be problematic. What are your thoughts to somebody saying, I'm going to get started in real estate today?
I would say your strategy is going to be a big dependent on how you get in, right? So if your goal is to get in and buy assets that you're going to keep for the long term, I think you're in a much better position than if you're trying to go and buy something that you're gonna, turn a profit on in 90 days if you're new, right? An experienced investor, like, they're still flipping houses because they understand how to find the deals and then underwrite the deals and price them where they feel like, hey, I'm still gonna turn some level of a profit. And I am, at least me, I'm looking at, if I don't have at least 2 to 3 exits, I'm not buying it, right? Like,
that's a good tip. Write that down, guys. If you don't have 2 to 3 exits, so let's say you do buy a fix and flip, right? You get a deal from somebody, or you get a deal from an agent, or you're cold calling, you're texting, you're doing whatever. You get a deal. Make sure that you guys have the ability to wholesale that deal, fix and flip that deal, or you know how to refinance and end up keeping that deal, worst case scenario, right?
Right, absolutely. So what it's done is it's caused me to look at, so I'm looking at single families. If I'm looking at a single family, I'm looking at it from the perspective of, if I got to throw a tenant in it, is it going to cash flow? I actually want to flip it. If I can flip it and the market shifts on me, all right, I know I can throw a tenant in it. I know I might be able to do Airbnb depending on what city I buy it in. And I know I can probably sell that deal to somebody who's going to hold it. So I'm considering all that in my underwriting. The other thing we're doing is we're being super strict about what comps we're looking at. Like, you used to be able to look at comps. If it sold in the last 6 months, you'd be like, all right, that's a good comp. Not anymore. 6 months ago was a whole different world than it is right now. And so not only are we looking at comps, but we're looking at, like, if it's not a good comp to me unless it sold like 30 days ago.
This is a really good point, because people ask the question of, like, how do I comp a deal? And I go, it's not a science, it's an art. And you have to look at what's going on and what the market is painting of a picture. And you have to go, okay, I got to emulate what's going on. The market has gone down significantly across the board. We haven't had a crash. We've had a definite settling in. In some markets, we've lost 20% on a lot of our houses. Like, we had a house that we planned on selling for 500. We listed it for 450. Ended up getting, we're getting offers at like 400. We're 100 grand off where we thought we were. We comped it right. We knew our numbers, but when interest rates go up, buyers' ability to buy a house goes down. And affordability is a major issue. $100,000 change in literally 3 or 4 months. So a 6-month comp doesn't make sense anymore.
It makes no sense. Right now, there is some value to looking at it, right? To understanding what the finishes look like,
but not numbers.
Right?
So if a wholesaler comes to you right now and says, hey, Henry, I got this great fix and flip for you. Here's 3. So this is a tip for you wholesalers out there. If you're going to bring a deal to somebody like me or a deal like Henry, and you go, hey, here's a comp from 5 months ago and it sold for this. What do you think somebody like Henry's going to think when he sees that number or that comp from 5 months ago, and the market has done this, right? It's gone down. Those comps don't mean anything.
I'm going to think you're inexperienced, or I'm going to think that you think I'm dumb.
You don't want the latter, right? You don't want the latter. He's stronger than you, I can guarantee you. Okay, these Arkansas boys are built different, okay? All right, so I'm brand new. I want to make sure that I've got 3 exit strategies. I want to be able to wholesale to a guy like you. Guys like you are still buying.
Yep.
You guys as a wholesaler, let's say I go, look, I know this is a good deal. Maybe I can go partner with a guy like Henry and go, I'll just JV with you on the fix and flip. I'll bring the deal, no assignment paid to me. I just want to be part of the deal. And worst case scenario, whoever you're JVing with as a brand new newbie, make sure they have the ability to refinance into a long-term hold. Interest rates are going to continue to go up.
Yep.
Right. We've got a 0.75% bump coming up in the next 30 to 45 days. And the Fed is also talking about how they're going to raise the rates again, another 0.5% by February.
Yep.
So we're talking about another 1.25% in the next 4 months. I feel like personally, and you can tell me if you think I'm wrong, I think that will be a final blow to one of the last things that are holding up this economy right now. I think it's going to price out another 50% of the current buyers, and we're going to have a big problem.
I don't disagree with you. I mean, I can see us going to 10%.
Interest.
Yeah.
Holy moly.
I can see us going to 10%. And
In your life and in my life, that's never happened.
It never happened.
It was like, well, maybe when you and I were born, our parents in like
In the 80s. Yeah, it was
like
what,
we weren't,
12?
Yeah, we weren't even speaking English at the time, right? Some would argue some people don't speak English in Arkansas, just so you guys know. But so 10% interest.
Okay. They speak Spanish in Arizona.
There you go. So 10% interest, bro. What do you think that's going to do for the economy and overall? If I'm somebody trying to get into real estate, what does that do for me? Does that pose major problems or major opportunities?
Yeah, I think again it's going to affect markets like here in Seattle and some of these big, fancy places where people want to live. I think they get hard. You know, the thing that I've struggled with, that I continue to struggle with as a ancillary data point, is we still have a supply and demand issue.
Right.
We still don't have enough demand. And so I think it impacts
Enough supply.
I'm sorry. Yes. We still don't have enough supply. And so I don't think it impacts the single family markets in the Midwest as much, but a lot of those buyers that want those single family homes, how are they going to be able to afford them? So I think it's going to cause a big slowdown. I think, you know, I was saying this, I said this on the market show recently too. Like, I think this single family home becomes the cool kid asset class again. You know, it's kind of, it was 10 years ago, and then everybody's been on this multifamily kick.
Oh yeah.
And now the deep discounts you can get because of the economic times, because economic times still create situations where people need to sell. It doesn't matter what the interest rates are.
Right.
It doesn't matter what's going on in the economy. People have situations in their life that they have to get rid of.
This would, dude, no joke. When I first got into like wholesale and I'm watching all these people crank out deals, I go to Brent Daniels and I go, so is there a point where all the wholesalers just find all the vacant houses and all the ugly houses and there's no more deals left? And he's like, you're joking me, right? Like, there's no end to divorce, foreclosure, people losing their job, drug addiction, you know, bankruptcy of some sort,
medical bills, man.
Medical bills, whatever it is, right? Or I got injured, I can't work anymore, those types of things. Like, we got a deal a couple of days ago where the seller says, I was put on leave at work because they were waiting to reopen their doors. They never reopened their doors. He's like, I sat around basically chilling on unemployment, waiting for them to reopen their doors, and never reopened their doors. So here I am. He's like, now I'm 4 months behind on my payments. I thought this, that, and the other, blah, 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 blah. I'm like, dude, this kind of stuff is always going on. In the greatest economy ever, it's always going on. So there's no end to the opportunity for a wholesaler or a fix and flipper.
Right.
But at 10% interest, are there going to be buyers?
Yeah. So are there going to be retail buyers? Probably not as many, obviously.
Mm-hmm.
There will still be some.
Right.
There will still be some who have decent jobs, who still want to own, because rents, they're going up. They're starting to come down a little bit because they trail typically home prices, but I don't know that you're going to see 20, 30% drops in rent prices.
No, there's no
right?
way.
So rents are still going to be high. People who can't afford it will still buy. And so what I'm looking at is, if I can secure these single family homes at deeper discounts, because the situations happen, right? And so the people need to sell. And if they have equity, they can sell within a wide range of numbers.
Right.
Now people are willing to say, well, I'll pay you 60%. I'll pay you 70%. But if they know I can't find an investor buyer that's going to buy it at 80%, and that investor buyers are going to buy it at 60%, now they got to go get it at 40%, at 30%,
Right.
or 50% if they want to make money, right? And so that just means our offers are coming in lower, and the people who are motivated will sell. And so
it's interesting,
buy
like
lower.
you know, at first I would worry about making these low ball offers because we have iBuyers in our market. I don't think you guys have iBuyers.
No, we don't.
Okay, so there's an advantage for you guys versus us, which Henry said it earlier, guys. Real estate is a very localized, specific type of business. You can't make a generalized sweeping statement that is nationwide because you've got markets like his that don't have the competition we have with iBuyers. However, these freaking iBuyers like Zillow, dude, you see what's going on with them?
Yeah, I heard.
And Open Door.
Yeah.
Lost, what did they lose? Over $100 million just in the last couple of months, making bad
Overpaying.
deals.
It's happening in the car market too. Carvana's been overpaying for cars.
It's crazy, guys. They're trying to buy up market share and they're just eating up investors' money. I personally believe what's going to happen is this trending market going downward is going to kick the iBuyers out of the market or make them rethink their entire strategy.
Oh, well, I mean, several of them said, hey,
We're out.
We're done with this.
Redfin is out. Zillow is out. I think that Open Door and OfferPad are a little bit too in deep in their business model.
Right.
They've raised too much money. I think that they're just like, we're going.
Well, Zillow and Redfin have other income streams that OfferPad does not.
Right. And the other thing with OfferPad and Open Door, they started creating these other verticals that were, well, we're going to be mortgage lenders.
Yeah.
Well, that's a screw. You screwed up. That's a really bad. Those go hand in hand. Like iBuying and mortgage lending, those both go down at the same time. So now you have two revenue streams that are going away. Same thing with title and escrow offices. They're trying to do that, and they're trying to do notary services and other things. Like all of those go away.
They're going to sell them back to us when we were trying to buy them in the first place.
I know. I know. So, all right. So the key takeaway from this is, market is going to settle down. It's going to continue doing what it's doing. The demand is still going to be there. So if I'm a wholesaler, I shouldn't look at this as a bad opportunity.
No, it's a great opportunity.
It's a great opportunity. Here's one thing that I saw in 2008 all the way through 2011. The majority of the people that just had a mindset like, I can't do this, they just got weeded out. And all the big boys like you, like me, we came in and gobbled up everything. And we're like, where's all of our competition?
Right.
There was no competition. And so, guys, that is an amazing opportunity for you. Listen to what Henry's saying. Tighten up your numbers. What I would say is find a Henry in your local market. Find somebody that's buying and go, dude, I need to I need to be attached to you for the next 24 months. I need to be able to verify my comps. I need to be able to learn fixing and flipping from you. I want to be able to bring deals to you and get the education from doing that rather than trying to do it on my own.
Shoot or shoot. Go find the shooters in your market.
Shoot or shoot. That's a great point. So I got a DM this morning. Last thing I'll say about this topic. And it's a fix and flipper in Atlanta. Sends me 3 deals. And he goes, I need you to help me on these deals. I go, what's going on? And he goes, I've got hard money on all 3. I was going to make this. Now I'm in these deals. I'm 3 months behind on all my hard money payments. I can't sell the houses. It's turning into a problem. What do I do? And I go refinance. He goes, I have bad credit. I can't get a refinance. And I'm like, if you had a partner or you had somebody you were attached to, like a Henry or like a me, you could come to a guy like me and go, I will give you the majority ownership of these if you refinance. And so that's what's going on these 3 deals. I go, if you let me have the majority ownership of those, I'll refinance those in my credit. I get to operate those. I'll give you maybe 10% back, but you're not getting your cash back for a long time.
Right. And well, I mean, but you're out of a terrible situation that's going to continue to get worse.
It's going to get worse. So if somebody doesn't come in and grab you and get a renter in there to stop the bleeding on the hard money loan, put a cash flowing tenant in there, you're gonna basically just wipe everything dead.
Yep. And so that's where I think this single family asset class is great, because right now I'm able, I'm sports analogies for me, like in basketball they say you take what the defense gives you, right? If you want to go to the basket and they're packing the paint, well, you got to take the mid-range jump shot. That's what they're giving you, right? Last year the market was saying, hey, we'll give you a whole lot of money if you sell your property right now. We'll give you so much money, it's going to take you 15, 20, 30 years to make this kind of money in cash flow if you keep it as a rental.
Right.
So take your underperforming assets, sell them, take that money and go put it into better assets.
Right.
Now the market's saying, hey, I'll give you a great deal on single family homes. You're not going to be able to sell them for what you want, but if you can sit on them when rates start to cool off and people enter the market, your values are going to go up and you're going to be sitting on millions in equity because you were able to buy and hold at the discount now.
Love it. All right. So key takeaway from this video, guys, is find a Henry Washington in your market, whether you're going to a RIA, you're going to a Facebook group, find the shooters, right? Henry says shooters shoot, find the shooters, get attached to them. That is that your number one asset is one relationship of somebody that's going to continue to buy through this market. I'm one of those people. Jamil's one of those people. Yep. Henry's one of those people. Go find those people. And what I would do also is go follow Henry over on Instagram and also on the market.
On the market.
How's that podcast going?
It's so much fun, man. Such a fun group of people, and it's I think it's relevant information because this market is shifting and people are freaking out. So being able to put a real time, real life spin on it, because everybody on the show is doing deals. And so for people doing deals to be able to say, hey, yeah, that sounds crazy, but here's what that really means.
Yeah. And then everybody on the show is doing a different type of strategy. So it brings this amazing like Avengers style to the show. And you guys should definitely go and watch that. We'll put a link in the description down below so you guys can get to that channel and also Henry Washington's Instagram. And we'll see you guys in the next video.